Okay, so welcome everybody. It is 3 o'clock. It is Thursday, August 29th. So welcome to our weekly coaching session. Looking forward to getting going here on some trade setups. You should have all received an email over the past week with a bunch of trade setups we were talking about. We will get into those as well as the questions that have come in here in the chat as well as the emailed questions. And we'll get over a little bit of the protocol as well to what we do and how you can take advantage and really hone in your skills here. Of course, my lovely disclaimer, I am not a licensed broker. I'm here to educate you and help you and assist you in your trading. Any stocks brought up is not a recommendation to buy or sell, only brought up for educational purposes only. Please make sure before you take any trade in the market that you verify that that is a trade that you are willing to take and that you're comfortable with the risk of any trade and that any dollar in the market is money at risk and you are comfortable with that risk. Awesome. Alrighty. Let's just get this to move over. Move over, Grover. Oops. Didn't want to close it. So, if there are any questions, of course, you can contact me, Ralph, at Omega Trades or Ralph at Affinity Trading. I have partnered up with Affinity Trading. I'm very excited about that partnership. I am their options instructor, and so you can either contact me there or you can contact Pat over there to get any help with any of your trading questions or what we can do for you. And I just want to get open one more piece to the puzzle. Come on, move over. It's almost like I need a fourth monitor. I have two. It's almost like I need to have two more. Craziness. Oops. So let's get going. I wanted to bring up IBM, which is a trade that we took off in our trading here. We put it on and did had a very nice profitable trade. And so we got in over here. This was the entry at 195, and we got over here the other day at 184-ish. So we had a very nice run to the downside on IBM, and we will show you the actual trade here in just a minute. Minimize that too. And so we've had a really nice run in the market, you know, for us in terms of our trades, up, down, and sideways. We'll look at the spiders as well. We had two kind of gap downs here. I'm wondering if we're seeing this nice trend reversal in the market going into September, which kind of dovetails into David's question about trading in September, so we'll get into that as well. For anyone that's new in the room, welcome. What we do here, folks, is we go over trade setups. We go over your questions. If you have any questions, please don't hesitate to throw them into the Q&A. I'll be happy to answer them for you. And also, I do take the emails that have come in and go through the emails and go through, you know, the setups that we talked about there, and take the questions, you know, as they come in as well. So I just dovetail everything in, okay? All righty. So one of the questions, which is from David here, and I'll send this back to everyone so you can read it for yourself as well. Send. And the question is to determine the trade. How does a trader determine the trades when historical trends in September have been on the downside? At least what I'm hearing. Well, that's true. A lot of Septembers will indicate that they are bad months for trade. You know, in terms of they are, you know, going to the downside. So you can basically look at, you know, trading negative, trading to the bearish side. See if that would be something that would work out for you in your favor. And so, you know, you can trade bearish. You can trade bearish in your retirement account. If it gets a little volatile in the market, then what you can do is you can trade short term like I do, That's the way I like to trade. I like to trade the shorter term stuff, 1 week, 2 weeks, 3 weeks. Follow the trend that you're seeing and put a trade out there that has the components of a good trade, which means you have a good risk-reward ratio. You know, if you're going to buy a call or you're going to buy a put, you want to be able to risk at least $1 to make at least $2, right? You don't want to be going out there risking $1 to make $1. You want to make sure that when you put a trade in the market that you are trading at least the amount of volume that's comfortable for your portfolio, which means on a $10,000 account, you're not putting $8,000 into one trade or even 5, okay? You're not risking $2,000 to $3,000 on any one trade, okay? On a $10,000 portfolio, look to go between 2 to 4% of your portfolio of risk. So it means that you could have a 4% stop loss on a $10,000 account, which is $400. All right, up to 6%, right? So you have 2 to 6% as a window for you to kind of say this is what I want to be at, okay? So when you look at September, David, follow the trend of the stock that you're in, and typically, you might want to look to trade the downside. Let's see, if you have positions for September expirations, how do you trade the option if you're only 1 strike out of the money? Well, 1 strike out of the money typically means that you have lower probabilities of being right on those trades because you need to really get a lot of movement to be right. So when you're looking at your trade, make sure if you do have your, out of the money, that you're okay with the risk and that you have a good upside potential. That's going to be important to you. All right, so make sure that you are going to be able to profit. You're going to be wrong more than you're right. That's the bottom line. If you're an out-of-the-money options trader, you have a lower probability of being right, which means that when you are right, you need to make sure that you take advantage of the less expensive options, and you have 3 to 4 to 1 reward to risk ratios, and you can take advantage of big giant moves in the market where you can get a large gain, like what we had on IBM, right? To show you guys that IBM trade, oops, I didn't want to do that. IBM, and we're going to go back. So you need to get trades like this where you're going to buy 5 contracts. So obviously you're going to need a cheaper amount, but look, folks, we got in at $7.65 and we got out at $14.05. So we almost doubled our money, okay? That's $7 of profit, $6 and change of profit on 5 contracts. It was over a $3,000 trade right there, okay? So David, I hope that helped to answer your question. If I need to go in more detail, let me know. I can always email you. So we did talk about several types of trades. Did everyone here get an email from me with a list of trade setups, bullish setups and bearish setups? If you didn't, let me know. Say no if you didn't, because that means that RT, no, you didn't. Okay. I sent it out on Tuesday. So if you guys just registered, this was the email that I sent out. And so it was, we nearly doubled our money in IBM puts. I'm still holding the position in one of my personal accounts, which is true. Let me make sure I didn't get stopped out today. Let me take a look here. And so we had some trade setups on the bullish side, if you guys want to write those down. And to the bearish side. So we did have some trades that we were going to be looking at today. And then I have a couple of questions that have come in, but one of them will be also on some strategy of selling puts. Okay, but these are some stocks that I think had some really nice setups. Okay, So what I'm going to do is I'm going to go like this, and I'm going to come over here, send to all, and I just copy pasted them into the chat so you can see the bearish and the bullish setups. Okay. Okay, so if you registered in the last couple of days for this event today, then you probably did not get them. I will add people to the list that have registered recently. Okay, and you'll get the upcoming stuff. So let's go through some of these trades and see what's going on. We had CGX, not CVX. I was going to say that doesn't look very bullish. CGX. Still setting up in a bull flag, okay? I would really want to see this thing break above the descending trend line. I'll draw a line like this. Oops, no, not that line. Let me erase. I will draw a trend line. There we go. Highlight it. There we go. Like that. So if I get above, about $56.35, I'd be interested in getting long this stock, and we're going to look for a move of about 50 to 58. So we're looking for about an $8 move out of this stock, okay? So, I'm just going to go through them, and then we can pick one or two of them to come back to and place some trades on, or at least get the setups going, right? We've got PWRD. Again, another one that's still setting up here. Hasn't given us an entry. I want to see it get above about $20.50. And then we'll see a possible run higher. Best Buy. I'm so excited Best Buy's doing well. I'm a big fan of them. I like Best Buy. Look at that. I wouldn't get in today. When I sent this out on Tuesday, this is Wednesday, this is Tuesday, I saw this little pullback here. One day kind of, not even really a pullback, but just at least, it stalled. And then yesterday, it just did, just pushed right up again. So I'd wait for a pullback. Okay, can you guys see this? By the way, can you see my charts? You guys see a black chart with BBY on it? Just checking. Okay, awesome. So, I think wait for a pullback on BBY. One, I'm going to throw in Tesla. The reason I'm going to bring up Tesla is because, oops, TSLA. It's finally giving us a pullback. And so on a bigger scale than than Best Buy, wait for a pullback on these guys. So you can get a nice little pullback here, and your next entry would be getting above that descending trend line there, right? So Tesla is definitely another one that we can add to the, which I did email out last week about Tesla waiting for a pullback, right? Because I said, look at this great run up. Wait, just give it some patience. Wait, it needs to have some pullback, and if you've missed it, the risk reward isn't really justified to get in. Okay, Facebook has had a great run. Facebook, FB. Again, this is another one that's having a really nice run in the market. I would wait. It's close to getting us an entry right here. It's really close. I'd be getting in at about 4178, 4180 would be my entry on that one. Okay, to go long and buy calls. 4180, I would say, would be a good number. Okay, we'll go through these, and then we'll come back to them. Halliburton, another one that's had a really nice run. And again, I want to get in, not today, but let's get, above the high of today, really, would probably be a really good choice. About $49.10 would be at Halliburton, $49.10. And it's probably looking for a move of only about $4, okay? So, looking for a +4 on that, okay? GME, GameStop, finally had a nice little pullback here after this gap. So, oops. What I want to see happen with GameStop, folks, is it's another bull flag pattern. And so, let's come in here, highlight this, and throw this in. And so if we get a nice move on GameStop, you can really expect a move from about 47 to 54. So about a $7 move out of a break of 51. Okay, GME entry is $51, and you're looking for a +$7 move. Okay, just looking at some standard technical setups here, right? That's it. Not Hess, even though it looks good. Decker, DECK. Decker, the reason I want to look at it is because it's very interesting, folks. What I'm seeing on Decker is the possibility of a head and shoulders pattern, and it might be trending in which means it might be a reversal. So the interesting thing about Decker is that if we get, we get this shoulder over here, and we get the head over here, and we get a potential shoulder over here, and then if it breaks through this trend line to the downside, I'll be getting bearish. If, however, it gets above the $59.70 level, so almost like $60, then I'd be looking for it to go in the other direction and go long. So right now, it's got a potential reversal pattern, a potential reversal. Okay, use the word potential. Reversal pattern to go bearish. But if it does, I need to wait for that to happen until it breaks down to about $57. Okay? Let's see, that was Decker. Let's go to Herbalife. Herbalife has been just a torment for me. It keeps wanting to set up, but now I just think it's just too long. It doesn't really want to give me what I was looking for. And so this is close to becoming off the radar. But it's, the idea of keep your friends close and your enemies closer. I'm wondering if Herbalife is going to give me my setup. We've got a bull flag in here. It's still a valid setup. Okay. And so it's at the bottom of the range right now. Okay. Very close to that bottom range. So if we do get a move, folks, I mean, you're looking for a really good 12, 15-point move out of Herbalife. But it's got to get above $64.80. Okay? Does that make sense? Does anyone have any questions on that so far? What I've been discussing? I'll keep going. QIHU. And so here's a nice, beautiful uptrend, folks. Okay, I've been, to just, some of these trades, how I find them is that I've been looking at them for a long time, and I put them in different accounts, and I keep trading them. How do you know? It looks like that your question got cut off there, Kenneth. It just says, how do you know? But I think QIHU is in a bull flag. Your symbols are not visible on web. Okay, not visible. you guys don't see the QR. Oh, it might be a little bit light to see up here. So let me do this then. The chart is probably big enough for you to see. But Earl, I did put into the Q&A just a few minutes back all the stocks that I'm bringing up, and I'll be more than happy to put them in again. And so what Kenneth is asking is, what's my technique? I'm a technical trader, Kenneth. I don't really. You're welcome, Earl. I'm not a fundamental trader. Okay, I stay in, and that's including my retirement account. Not that you can't trade fundamentals. I believe that depending on the person you are, you want to trade a hybrid at least. But for me, I trade things before earnings. So basically, these trades I'll get into and be out of before the earnings are affecting me adversely. Okay, I don't trade buying. I don't buy calls and buy puts through earnings. I don't believe in that. Because it's low probability trading, and by the time you want to do it, there's a ton of volatility in it, right? So I'll go through these, and then I'll be more than happy to resend them back in. So my technique is just looking for technical patterns in the market. All right, so here's Tiffany. It has actually fallen down the last 2 days since I saw a double top here on Tiffany. And I thought, all right, I got a double top, which is a possible bearish pattern that, all right, it couldn't get through. But I also had this trend line that was very, very appealing to me. I saw this this line like this. Okay, so I was like, all right, well, maybe this thing has got some legs and it's going to come down like it did yesterday or 2 days ago, find support, and then come back up and start coiling up into what's called an ascending triangle. So one of my technical patterns I look for, Kenneth, is I look for bull flags, bear flags, triangles, all these patterns. And so it broke down. So this is no longer a valid stock for me to trade to the bullish side. It's broken out of the potential patterns. So what I do is I just go through a whole litany of stocks, and I just look for patterns that my eyes have been trained to see. Like GMCR here, looking really nice. I wouldn't get in today. Again, it's at at the high. But when I sent this out on Tuesday, here's Wednesday, here's Tuesday, we had a nice little pullback on this red candle. And I was waiting for that break above the high, the open of Tuesday, and we got it. And then it broke out of resistance, and it broke out of resistance again. So 2 days of breaking resistance. I'm not about to step in front of this right now. Okay, I need a little bit of a pullback. And Earl, I'm pasting that stuff back into you. So, oops, sorry, I didn't mean to send the whole email in there. I apologize on that. That was a blunder on my part. Let me do that again. There we go. Here's the bullish setups. Copy, paste it in. You can throw that into anything. And here are your here's your bearish list. Boom. There we go. So what I'll do is, I've got several watch lists that I look at, and I'll spend some time going through these. And then what I do, folks, is I funnel them down. I kind of throw all the stocks through a big funnel, which is just looking at them. And then if they pass through that first funnel, then the second funnel is potential trade setups. So, right now, GMCR has made a bit of a run. I don't want to get into it right now. I'd wait for a pullback just like I am on Tesla. MCD, the stock I love to hate. I'm waiting for this break. It's very close to breaking. I mean, it's right at close to the low of the day. I would really like for McDonald's to break down from a personal standpoint, I don't like McDonald's. You know, the food is delicious, but it will kill you. Watch Super Size Me. There's a move here, folks, from like 99 down to 94 and change. So we're looking for a $6 move on this. If it breaks down pretty much on the low of today, right? We get that low of today, or close to the low of today, and we've got a potential $6 move to the downside. All right, so there's one possible trade setup that we're going to put on today, which is going to be McDonald's. McDonald's looks like it's going to be a good setup for us today. Okay. BIIB is another one. And all I've done, folks, is I've trained my eyes to see patterns that are there in front of me, and I can recognize them. And it just took some time to learn the patterns. I teach them. I show people how to look for them, what we're looking for, being very precision, have the precision in the market to trade correctly. And then we'll go through and put some trades out there. Okay. So BIIB, I'm looking for a breakdown of about 208. Okay. SRPT. Okay, SRPT. Again, another big bear flag in the market. Okay, so this one, I'm looking for a break down below about 33.80, 33.75, and a move from about 38 to 30. So another $8 move on this one to the downside. Bristol Myers, BMY. Another bear flag. It's one of my most favorite patterns to trade because it is so prevalent in the market. Bristol Myers, I'm looking from 44 to 41, so about a $3 move when it breaks out of 41.60. Okay, bearish. Buying puts, bearish. Home Depot, breaking down a bit here. Show another bear flag. Okay. And so Home Depot looking for a move from about 79 to 73. So about a $6 move on the breakdown of about 74.40. All right. I wait for those entries. Yes, I do definitely wait. I am very disciplined. A lot of times I don't take the trade because I'm just waiting to be uber disciplined. Caterpillar. Caterpillar has been, it's found some support here around 81 and change, and so let's see if it sets up for us. If this thing does create another bear flag, that would be cool. If it does break down out of support, I'm okay with that as well. Either way, I'm looking for a move from about 86 to 82, so about a $4 move there as well. And we'll go back and we'll set some of these up, hopefully get a couple of trades on. Philip Morris, you can see it had a nice bear flag and broke a couple of days ago. It might be potentially setting up again for another bear flag, okay, after the other break. So let's see if we get a little bit of a retracement up before it slams itself down again. It's another one of those stocks that I love to hate. Philip Morris. UPS, ups. Well, the ups is kind of going downs. And so what I'm seeing, folks, is that this might be looking to break to the downside below about 85.55. It's finding a nice area of support right here where it's at. And if it breaks down, then I'm looking, again, to buy puts on this one as well. XOM. This is a big, giant bear flag, and it's close to breaking as well. And we're looking for a move from about 91 to about 80, 86. Okay, so we're looking for a $5 move to the downside on XOM. Okay, expect $5 when it breaks out of like 87.30. Okay. Oxy and Monsanto, and then I'm going to get to another question that came in via email. Oxy, again, another one that's creating this bear flag, like that. And we can look for a potential move from about 92 to 85. That's another $7 potential move to the downside when it breaks out of this 87.87. So you break down from about 87.80, and you can get a nice little pop from 92 down to 85, another $7 move down. And our last one, and then we will go back and really hone in. Another one that's breaking down. I also like to trade stocks that do have weekly options on them. So I typically will trade stocks that I have a lot of flexibility on. So Monsanto, again, breaking down, a move from about 104 down to about 94, so potential $10 break on this if it does break out of this lower trend line. Okay. And so one of the questions I did get was someone who listens to a friend of mine, Tom Sosnoff at Tasty Trade, and I know them well. I used to work with them, so they're good friends. And so they were talking about a trader that came on and was selling puts with about a 5% probability of in the money with about 50-something days out. So very, and what I love about this, Les, is that it's got a discipline to it, right? Selling puts that have, 50-something days out, so about these Octobers, and has about a 5% probability in the money. Now, and then sells a call with 10% of being in the money. So probability of in the money, okay, is right here, the first column on the call side, and it's right here. So what this person is looking for, I got to expand a ton of strikes, is finding a 10% probability, selling puts with a 5% probability of in the money. So I don't even have enough strikes, which basically the reason for this strategy is that they want to have, look, you've got to go way, way, way out, okay? So barring a catastrophic event, you're not going to get hurt. The problem is that if you do get hurt, it's going to be, because the stock has gotten ripped. But your risk reward is the problem. So you're going so far out, Les. You're going 50-something days out, and you want that 4% probability of being in the money. Apple is a $491 stock. You're only going to get $75 per contract. Okay, so think about this. You're selling a put at $395. All right? And it's got to move a ton for you to be wrong. The problem is that if you're right, you only make a very small amount of money. Yes, you might have a 90-something% chance of being right, but you're picking up such a small amount of money. Okay? Does that make sense, Les? I don't think it's a bad strategy. It's just I want you to realize that there's a lot, you're not picking up a lot of money. If you were going to do this type of trade, okay, she's doing a strangle. So she's selling both sides, right? She's selling this side and selling the other side. So she's kind of doing an iron condor. Yes. All right. So why this is a tough strategy for me? Well, if she's doing this as an iron condor, then you're basically risking the vertical spread, let me show you the vertical spread. Your risk reward is you're going to get 12 cents on the vertical spread, and your risk is $4.88. I don't want to make $12 to risk $4.88, right? Then on the other side, she's going to go out and do the 10%. So let me go to the probability in the money, 10%. So this is what she's getting. Okay, she is doing a trade that risks $448 to make $52. After commissions on 4 trades, you know, yes, you got a huge range of profitability, but how much is it going to be worth it for you? I mean, do you want to make $50 to risk $450? I mean, that's a lot of risk. So it looks pretty good, but the probabilities look good. But think about this, okay? You're not going to get called out on this often, Les, and this is a good setup for people because you're risking $450 to make $50. So just think about this. I'm going to throw this on an Excel spreadsheet, wide open Excel spreadsheet. You make $50 1 month. You make $50 2 months, 3 months, 4 months, 5 months, 6 months, 7 months, 8 months, 9 months in a row. Okay, Les? So, and this is for everybody. So for 9 months in a row, you make money. Okay? And barring any minus commissions, you make $450. Now, each one of these trades is going to cost you 4 commissions, right? So, you know, take into a factor what you're paying in commission. Then you have 1 bad month, and you lose $450. Yeah, Les, she's doing with 2 legs, right? So she's doing the calls and the puts. She's selling the call. Yep. Yeah, that's what I've got here. I'll show you. Let me show you the trade back here. Here's the trade. Here's the calls. See, I'm selling the call and the put right over here. If you look at the trade, I'm selling calls and I'm selling puts. Yep. No, you're fine. No worries, Les. But you know, both sides are, you only can have risk on one side. So think about this. Month 1, 2, 3, 4, 5, 6, 7, 8, and 9 months, you profit $450. Month 10, almost 1 year, and you give up all of your profit. So she's right a ton of times, a ton. But when she is wrong, she is going to lose everything she gained and then some. Just think about paying, I don't know, $5 in commission on every one of these 10 trades, you know, the 4 winners and the 1 loser. So let's say you paid $5 on 10 trades. That's $50. So after 10 months of trading, you made $450, you lost $450, and you paid $50 in commissions. And I'm going to put that question back to everybody, Les, because the question is, does this not give you time to fix as it plays out? You have plenty of time to fix it as it plays out. Fixing bad trades is kind of a risky proposition, right? I have a deck in my backyard. I've got some rotted out wood, and they have a really cool paint that I could put on top of it. And so it was, you know, this guy made a good point. I said, hey, listen, they have this really cool paint that I could throw over the top of the deck. What do you think? He goes, do you have some dry rot? Is it rotting out? I said, yeah. He goes, well, then all you're doing is covering the bad. So you're not going to make it any stronger. There you go. There. Okay. Thank you for putting that part of the equation in there. Okay. It's interesting because she made $41 million with $500,000 in 3 years. When you have $500,000 in the market, okay, you can put out a ton of contracts. A ton. So what you would have to do, Les, to make this work for you, if you have a $500,000 account, you can go out there and set these trades up at multiple strike levels. So one day she'll put out 50 of these contracts, let's say 20 of these contracts. 3 days from now, she'll shift the goalposts over, okay? So what she'll end up doing is, let me see if I can do this the most efficient way possible. Do you know what I mean when I mean to move the goalposts? Is that you can shift back and forth and change, you know, so with a $500,000 account, that's why. That's why. Even with a $100,000 account, this is really tough to do. And I actually do think I remember this person, an older female that I do remember. All right, so yeah, this is it's doable with a $500,000 account. With a $100,000 account, you can't even do this because you don't have enough buying power. She's taking 500 grand and she's using like $300,000, $200,000 of it, and she's moved the goalposts to so many different. She's selling so many different pairs that it's worth it for her. Okay. Hope that helped understand that. Oh, you're absolutely welcome. So let's go into some of these trades. We're doing pretty well today. We have IWM that's making us money. You know, the P&L since the open is a little bit of a misleading piece because we've been rolling these options. So Herbalife, you can see I still have setting up. It's kind of doing nothing. We got to roll these options. We sold this for 84 cents. It's worth 6. So 84 cents, it's worth 6. Let's get rid of that. So let's see, what do we have here? We have the, all right, here we go. Let's go collect another $1 and change. Boom. Let's go through some of this. This one has gone against us a little bit. Let's get rid of it and roll it and get another 90 cents in credit. So we just created over $2 in credit to sell options against each other. All right, $1.24 and 90 cents. So this is doing those calendar spreads that we've talked about. And here's that covered call in the spiders. Let's roll this again. We sold it for 62 cents. We're going to buy it back for a penny. All right, we're going to buy this back for a penny or 2 cents. We'll pay no commission on it. And then we'll go in and we're going to go sell a covered call for next week at the 165 level and collect some more money. Right? These are trades set up for the steady eddies, folks, right? The steady eddy, make a few bucks, okay? Now, I want to see some more trades like what we had with IBM. That's what I really want to see. I want the IBM trades. I want these suckers to come in, find them for me, and that's some of the lists that we talked about, right? Let me studies, delete studies. So let's go through a few of these trades. I'm liking this McDonald's trade. Ironically, today we have a strike of some of the fast food workers. Here's an old trade. I got to get rid of this. Delete this. Oops. So, oh, yep. Look at that. We even got our entry on McDonald's. So here we go. Okay. So here's the here's what we're seeing on McDonald's from 99 down to 94. $5 move. Okay. Getting in now should project the move down from 94.80 to 89, right? So let's take a look at $5 down, and we're going to look for a move in the next 3 weeks. So our October options, if we go buy the $95 put right now, should be worth about $5.50. You see this right here? Does everyone see that? So does anyone want to put a trade out there that has $2 of risk to be worth $5? Okay, so look, we're looking to make $3 and change with our stop loss, which is going to be about $1 above here. We're going to put a stop loss in place. So we're looking to make $3, okay, off of our $2 initial cost in, and we're risking $1. All right, so here's our 3-to-1 reward risk ratio, folks. We can get in at 360, and it'll be worth $1. We'll lose $1.20 if we're wrong here. We lose $1.20. So either we risk $1 or we risk $1.20, and we look for potential gain if it drops -5, where this could make us 3 and this could make us 4. Very interesting. What trade would you guys like to do, guys? You want to buy the $95 put or the $97.50 put? And if someone doesn't understand what I'm talking about, please let me know. What do you guys want to do? You want to buy the $95 put? Les wants to do the 95. The $97.50 is only going to be risking 20 cents more, but it has a $1 more in upside potential. I'm risking $1 to make 3 on the 95, and I'm risking $1.20 to make 4 on the 97.50. And I have a higher probability with the 97.50. So I'm going to go out and buy the 97.50. Les changed his mind. He likes the 97.50. So I'm risking $1.20. I am going to do this 10 times. That's risking $1,000 on 10 trades. I am not risking all of the money in the account, folks. I'm buying this right here. Okay? Now, I need to put a stop loss in place. Okay, that's gotten filled. There's McDonald's. Okay? I need to put a stop loss in this, create a closing order, and I need to do this as a stop, and I need to make this a good till canceled, and when this stock gets above 95.90, boom. All right, again, not a recommendation to buy or sell. Make sure you verify that this is a trade you want to put in your account, but I am basically putting my stop loss in place at 95.90. If I am wrong, I'll lose about, $100-ish on 10 contracts, okay? If this thing does break down the way I want it to, we're looking to make, what did I say, $400 times 10 contracts. So I'm risking $1,000 to make $4,000. Or I should say, I'm risking $1,200 to make $4,000. Okay? I like that trade. I think that's a really good trade. Nothing's a guarantee, right? Let's go through CGX. I just think that looks so nice. We've got a really nice move from about 50 to 59. And my discipline tells me not to get in until it gets above, about $56.50. Okay? Are there any stocks out there you guys are looking at? I've given you all the ones I'm looking at. I'll be more than happy to send you guys emails on them. Again, as a paid member, folks, you're going to get these every week from me. Okay? I'm going to send these to you. And you're going to be able to look at these trades and say, wow, maybe I could find the IBMs and make $600-something over a 4-week time frame on 5 contracts and make $3,000 for a month. Not a bad day. Not a bad month, right? If it's one contract, it's all scalable. I mean, if you've got a $5,000, $10,000 account, you're doing this 1 or 2 times, then obviously, your rate of return is still the same. SSRI. One of these little $8 stocks, right? Do they have options? Yeah, they do, and they're very cheap. Looks like it was setting up in a bull flag here, but it then broke out of support. So it was starting to want to do something like this, but it broke down yesterday, and even though it's up today, it's still not looking very good as an upward trending stock. I would want to short this. If it can't get above towards the end of the day here, which we're almost at the close, this is a good potential to get back down to $6.70-something cents. So SS, I'm expecting that to drop a bit. MUX, this one has a little bit more of an upside potential. Nice day today to kind of counterbalance 2 days ago. Wait for the resistance breakout of 291 to get a nice little move, probably of about 30 to 40 cents. All right, and I mean short term for the next month. Look to get up this other area of resistance up to the 320 something line. Okay. These stocks are way too cheap though to be putting options into. The CME. That's a long bull flag, which really, we don't trade flags out that far. Bull side. On the short side, though, this looks to want to break down. You see this candle here? This candle is a potential bottoming hammer. This could potentially be a bottoming hammer, Arturo. And if it does tomorrow break above, it would be a very early and a riskier bullish trade. But this is considering hammering out the bottom and might start to push and, want to start to find its bottom. And I'm not a big fan of picking bottoms, so Arturo, I'd wait for it to start to climb. If it breaks down from here, and this is a not valid hammer, then you can probably look at this going from 70 down to about 65. All right. It's had a series of lower highs and lower lows, and it's making a new low today. The Googster, eating Apple's lunch, even with it being at 860 something. I am slightly bearish on it. All right. It's showing me a series of lower highs and lower lows. So, Dan, I don't pick bottoms. My mom gave me some amazing trading advice when I was a very young kid. She said, Ralph, don't pick your bottom. I don't pick bottoms in trading. Now, if they do confirm a bottom, then I would love to see that kick on here and start to push higher. I don't know if that's going to happen. So I want confirmation, all right? I don't want to be the only one walking across the street with cars coming. I want to make sure other people are coming along for the ride. So to me, it looks like it wants to break down again. And if it does break down again from here, it's going to want to go down at least to, the 837-ish line, the 838 line, okay? Because that's the old area of resistance over here. Bank of America. Bank of America is starting to, Boeing, sorry, Boeing. Boeing's had a beautiful run, and today it's getting a nice little pop because they were talking about it on TV. You're welcome, Dan. I like the idea of Boeing. Now that doesn't mean because I like it that it's going to go up, but I want to see it break above that line. Okay, David. If it breaks above the descending trend line, all right. I want to see it go from 105 to 109, and then I want to see it continue from there for a move of about $9, from about 97. Actually, sorry, $10. Okay, I think this got a $10 move to the upside if it continues, but wait for it to break above. Procter & Gamble. Breaking down, and so no entry to go either way, but let's see if it starts to it was breaking down here today, and it's kind of reverse course. It's bisecting that yesterday's candle. So my initial thought is, all right, let's see if this can get above the 50% retracement of yesterday, which it looks like it's going to be tough to do. It's right at it right now. But I would be still bearish on P&G. So, yeah, it might break down. Oh, you had a Tesla trade, huh? Is it AIN? I think it's AIN. And then we'll do CRM. So you must have done pretty well on that one. CRM earnings. So it looks like earnings are really giving this thing a nice little pop. Salesforce looks like it's going to want to, let's see, after the market today, right? Is that what it is? After the market today, yeah. They're getting a nice pop. So after earnings, if this is able to clear through the 45 level, then we'll look for the $47 level to be the next stop along the way. Salesforce looks like it wants to be bullish. If it breaks down, it's got a long way to go before you can look for a bearish trade. It looks like, you know, the earnings are going to be good. I don't really trade a lot of earnings. It's a low probability. It's, you know, results will be out here in just a few minutes on CRM. Now, what I do like, folks, is I did mention the McDonald's trade. I think that's a really good one. The GMCR, that's not giving me any good entry right now, even though it's another trade that I've called in the right direction. Decker, if it breaks above that 59.90, folks, that would be something I'm really interested in. Hess. Hess is setting up in this ascending triangle, okay? I'm a very technical trader. There's the area that can't break through on resistance. And here's the ascending line. So we could potentially look at a move of $4 when Hess breaks above 76.50. You're welcome, Jeff. You're all welcome. I have no problem going through these. ExxonMobil. Man, this thing is ripe. ExxonMobil. Earnings are out of the way. It's right. It's really tempting me right now. A little bit lower, and this would give me a really nice move from 92 to 86. So we're talking a $6 move when this breaks out of the low of today. So it's almost there. It's like, almost there. But you know what? I'm not going to take the trade until I get it there, right? Almost there isn't good enough. I want to get it on the break of the low of the day today. And you get a break of the low of the day today on ExxonMobil, and I'm looking for that $6 move down. See how it is? Look at this. Chug, 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 chug. Look how many days in a row of downward trend. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. And then it had 1, 2, 4 days out of the last 6 that have been up. So I think it's going to continue to drop. So I think I'm really liking that McDonald's idea. Okay, right now we're just down the 10 cents between our bid ask, so you know we'll be okay with that. I'm a little nervous about showing this, but here's that IBM trade in my own personal account. Here's one of them, right? Here's one. Here's one contract trade. Okay, I want to show people I can trade small. One of my account values is a smaller account that I trade, and this sucker has made me $921 on one stinking contract since August 2nd. Okay, so you can't tell me you can't trade small and make money, because there it is right there. I actually opened this account specifically to let people see occasionally some trades where you can make money with smaller amounts of money. I mean, with smaller accounts, definitely. I fully believe that. Now you have to stay, in context. I mean, you can't make $1 million on a $20,000, $5,000, $10,000 account. So Jeff asks, I'm trying to understand your line drawing technique. Sometimes you include wicks. Good question. Good question. So I look for the most amount of touches. That's what it's important to me, irregardless of if it's a if it's a high or an open or close. So wicks and tails are just fine for me. If I go to IBM, I want an area that I can say I had a lot of trade volume or trading through that area. So I will look at things like McDonald's, MCD, and I will be happy to draw something that grabs the, close to the close of the day, the wick of this one, the close of this one, and bisecting about the close of this. So the methodology, Jeff, and for everyone out there, is I want to grab the most amount of points that I possibly can grab as an area of relevance. And I'm okay with using wicks, the wicks or the shadows on the candle, as well as the opens and closes. The stock traded at those prices for a reason, so I'll use them. TSLA. I think Tesla's going to look really nice here, folks. I think Tesla's going to really do a nice one here. Here I'm going to go see, and this is why I'm going to bring this up, Jeff, because I'm going to grab the high of that candle. So see, by grabbing about the high of the wick, I grab the open and I grab about the high of today, right? If I, it allows me to grab 3 points. If not, then I'm only grabbing today and yesterday. And so, it allows me, and I adjust accordingly, but I will go out and find, the highs and just grab as many points as I possibly can. Does that make sense, Jeff? And you can draw it either way. It's subjective. You can say I'm only going to grab opens and closes, or you can grab everything that you want to see. I'm okay with grabbing, as many points as I could possibly get through. Okay, I just want I want to get as many touches on a look at this thing. I want to grab as many touches as I possibly can. All right. That's the absolute most important thing that I can basically. Oh, you're welcome. You're welcome. Everyone's got a little bit of a tweak, right? The important thing is that as long as you can figure out whether or not they can, make some money doing what they're doing. That's the most important thing. So now I'm going to be sending some trades out during the week, and of course I'd invite everyone to become a member of the group. Which one? Draw a pennant, Ken. Tesla. Yes, you can definitely draw this as a pennant if you want to grab this lower end. Now, here's the interesting thing about drawing a pennant. If you would have drew from here up and then using this line down, here's the interesting thing, is that when you draw a pennant like that, there's nothing wrong. Oops, what did I just do? There's nothing wrong with that. What you need to pay attention to is that basically when you trade a pennant, sorry, I had some things popping up on my screen, you're looking for it to move in the direction of the trend going into it. So the pennant is coiling up and springing like right, compressing a spring, and I look for a short-term move from 173 from 159.50 to 173 to the upside. I'm going to use the same entry as the bull flag, okay? And so you can look at it either way. I'd be looking at a break above this 176.50 line, and I'd be looking for a move from 173 down to 159. I even call it 160. That's a 13-point move. Check this out. If we get a 13-point plus move on Tesla, and you go buy, now these are expensive, you know, a short-term option, like in October, your $18 option is going to be worth 23 bucks, okay? Now, it's a high volatile stock. It's a more expensive stock than some people would want to trade. But I think that you can definitely look at it as a bull flag. And you can also see the bullish pennant that's forming. The channel is, the bull flag. It gives me a little bit of a, I'm looking for a bigger move. I'm looking for the move from about 145, 147 over a little longer period of time. So the pennant will break, and it will also confirm my bull flag. But yeah, there's nothing wrong with putting a symmetrical triangle, a little pennant up there. That's definitely a bullish pennant, that's for sure. But I'm looking. Well, you can sell a put on this, but then you also have got a lot of. Oh, you're welcome, Ken. If it's expensive, then why not wait for something like this? Sell the vertical. Go sell the vertical. And that way you can trade those very expensive stocks. Here, look at this. This is a bullish trade that's going to risk 358 to make 142. Okay? And this probability, this trade's got to analyze this. This trade has got a probability that's fine. And this trade has got a probability for September where you can risk 300 to make 150, risking 350 to make 150, and you've got a 65% probability of that happening. So if you can't afford the more expensive stock to buy the call, buy the put, you can definitely look at trading with a vertical spread. So folks, if you want to be involved with us, we do have an offer that we're charging $80 a month to get the setups that we're looking at, to come and ask you questions, email me your questions. Okay, so I would love to have you guys continue working with us. If you're on your trial, please, take a look at what I'm offering you guys and seeing what you can do with what we're offering. By the way, CRM beats and raises. Nice. Let's take a look at that chart. See, now here's the interesting thing. CRM's volatility is going to get sapped away now. All right? Watch what's going to happen to the volatility in these options tomorrow morning. Okay? So I agree with you. I like the idea of trading CRM. The problem is that you are going to have all that volatility sap out of the option, and even though the stock might make money, the option might look like it's going to make money. The problem is, look at that. It's beautiful. It's awesome. It's up $3 after hours. The problem is when you take in the volatility loss, you might not make a lot. You're going to make a small amount. So, folks, I'm going to put some trades out there. I'll send you the recording. You get the recordings of these events. I'd love to have you continue with us. When you think about it, $80 a month to get trades like the IBMs and the McDonald's, it pays for itself. People that that take these trades, the trades will pay for themselves, and the coaching will pay for itself. That's for sure. I mean, folks, if McDonald's makes a $5 run to the downside and you make $400 on one contract, that pays for pretty much the entire year of the coaching. And of course, you can cancel at any time. You're not locked in to anything. So if you'd like, just grab that link, sign up, be a part of the group. I'll get you some trade setups. And are there any other questions? Jeff, good question. So the subscription is the weekly coaching, email support of any of your questions that you have on trading, and sending you trade setups, targets, entries, stops, and time frames. So what I'll do is, we place that trade in McDonald's, but what I'll end up doing a lot of the times is I will put a trade out there, and I will give you the trade actually as it's, what to look for. I'll show you the chart so you can actually read the chart with what I'm looking at, so you can train your eyes to see it, and then you can, I'll actually cue that back to you so people can read what you're writing me. And that way you can see the chart and what you're and what I'm looking at, and you can send that back to me and say, yeah, this is what I'm looking at, this is what I'm looking to make, is it worth the risk and reward? Absolutely. So it's not just this 1 hour session. The format is we meet Wednesdays at 3 p.m. Eastern for 1 hour. You can email me your questions anytime during the week. If you want, I'll email you back the answer. Or in the case of today, we had 2 questions, and they sent them to me today, so I responded to them in the coaching. So I'll either answer your question in the coaching, or I'll answer the question to you in your email, and you will get the archive. You can go register for the archive and replay every one of the coaching sessions, and go back and listen to the recordings. And when I send you a trade setup, you'll have the trade, the target, the entry, the stop, and the time frame, like what we just did on McDonald's. And of course, anyone can cancel at any time. So don't, when you're paying $80 a month, you can get the $80, and then if you decide after a month it's not for you, no problem. You have control. You can cancel anytime you want. Okay, folks? Anything else I can answer for you? The link to sign up, I just threw the link in there. It's right here. Click on that link right there, and you'll sign up through PayPal. You're already in today's event, so I can keep you in the event for next week. This is to pay for the coaching, okay? And then you'll be getting the recordings, and then you can email me, and I'll answer your questions. So since you're already in, you got in today, you'll be set up for next week. And I let people stay, and then, like, for example, if they're here on their trial, and they don't become members, and I just expel them from the room. So you're already set up to get into next week, and now I just sent you a link back that will allow you to pay to become a member. And it's through PayPal, which allows you guys to have full control over what you're doing. All right? You can cancel at any time. You don't even have to call me. You don't even have to, there's no disputing, there's no arguing, there's nothing. All you do is, you set up the profile and you pay for it, and then on your end, if you say I'm done, you say cancel. That's why I use it. Some people have said they don't like it. I never liked PayPal. I hated it. I got kind of messed over by buying a computer that didn't work, but it gives you control. They've come a long way, and the way it sets up now is that you guys have control of cancel anytime you want. I'll be honest. I've had Jeff. I'm in New York. Where are you, Jeff? And I don't know how to pronounce your name. Chi-Town. I love Chicago. Severiswar? Oh man, I'm going to kill that name. Nadu is your last name. So I apologize that I can't pronounce your name, but you're more than welcome to join us. I love Chicago. I might be doing I'm I'm looking to get to Chicago, hopefully. Yeah, I might be doing a coaching class. I'm on Long Island, Arturo. I might be doing an options class in Chicago. So this would be a nice dovetail for you. They're looking to get an options instructor out there to teach a live class, and that would be me. Yeah, so I've teamed up with Affinity. I've had a very good relationship with those guys, and they're great. All right, folks. I think I've answered everything. Arturo, yeah, I'm out in Suffolk County. I do work out of a small office once in a while, but I also work out of home too. All right, everybody. I appreciate you being here. I look forward to getting you out all the recordings. I'll spend a few minutes and get some more trade setups out to you, and I will talk with you all soon. All right, you might get 1 or 2 emails from me. I'm going to send it out a couple of different ways, so that way I can get everyone. So please apologize if you get more than one. Oh, thank you very much, Gabrielle. I appreciate the the kind words. Send me any emails if you have any questions, folks. Thank you so much. Take care. Bye bye.